Hey everyone, I'm Michael Abbott. I lead the global banking practice at Accenture, which includes our payments practice. I'm sure, like you, I can't wait for the day when we're back in person. Keynotes are so much more fun in person. Over the last year, we've talked to hundreds of clients, thousands of consumers, and too many fintechs to count. And what we've learned is that below the placid surface we see today, there are turbulent forces reshaping our industry. The good news is we've seen this movie before, and as an industry, we can write the ending. But the decisions we make over the next few years will determine what the 2030 Payments Canada keynote will be all about. The question is, will banks continue to drive the incredible innovation that has fueled the payments industry? Or are we about to become credits at the end of the show? It's back to the future, so let's dive in. There is zero doubt the pandemic has changed payments forever. Tap and pay has exploded. Digital adoption has gone through the roof for all age groups. 2025 is happening right now. And what we are seeing is the convergence of two supercycles that are quietly influencing every aspect of financial services. The first supercycle is the neo-normal. It's the convergence of tech and banking. We are playing in the same increasingly crowded space, and differentiation is hard. In North America, nearly every banking app is rated 4.8 or higher. It's a sea of sameness. Digital is no longer a differentiator, and consumers are spending more time on non-banking app marketplaces and platforms that are making payments invisible. We all know who they are, the Amazons, the Ubers, the DoorDashes. As my wife told me the other day, the fun is buying, not paying. Whether we like it or not, we are entering the post-digital age of banking. And the second supercycle, and perhaps the most important one to banking and payments, is the battle for experience. For years, we've heard that bank data is the holy grail for fintechs. It's worth a fortune, we're told. Well, I have an inconvenient truth to share today. On the open market, consumer banking data is close to worthless. Well, it's not exactly worthless, but today we can buy card transaction data for our retail partners for around 10 cents a person. That's right. Card transaction data on the open market is worth about a dime for your data. And if we think about it, it's not surprising. Just ask yourself, is Facebook's data worth anything without Facebook itself? I'd argue it's not worth that much without Facebook. It's the ability to change experiences using data that ultimately creates value, not data itself. Own the experiences, you own the value. The good news is we've been here before and the industry has risen to the occasion. It was the 1950s and payments were about to change forever. It was the birth of the credit card. In the 1930s, during the Depression, to drive sales, merchants began extending credits to consumers. It was a simple, closed-ended system. Today, we call it private label. The digital equivalent in our market today is our banking app. It's a closed-end application. Eventually, though, someone asked, why carry all those cards? Why carry all those apps? Couldn't one do it? And in the 1950s, Diners and American Express appeared on the scene. They were the first open loop products, but banks weren't worried. They owned the deposits, they owned the branches, and take up was slow. Today, that's Google and Apple Pay. Eventually, though, banks realized they had a problem and they started innovating. Of course, initially building their own closed networks like Bank of America, but eventually they figured out that payments is a network game, better played as a team sport. So they got together, collaborated, and created Visa and MasterCard. The challenge is today, there's no digital wallet analogy for Visa and MasterCard. And there are big differences this time around. Technology has changed everything. We no longer have decades to innovate. At best, we are going to have years. Digital payments are everywhere. Consumers spend over $35 trillion globally on cards. So we need to ask ourselves a simple question. What would we pay to influence $35 trillion of spend? That is the battle for experiences. And innovation happens in years, not decades. When neobanks enter banking, they almost always attack payments. N26 and its partnership with TransferWise let you move money cheaply and with ease. My son, who happens to live in Germany, needed to move money locally. He got an N26 account in a matter of minutes, linked it up to his US account using TransferWise, and now he moves money back and forth, and he will never go to a major bank again. Chime is another great example. During the pandemic, they added 8 million users. Their value prop? Simple. Get your paycheck a couple of days earlier. That's it. Just get paid faster. These are product innovations, first and foremost, centered around payments. And everyone is becoming a terminal, whether it's Square, Venmo, Interact, WePay, Alipay. It won't be long before we can just simply flip our phone over and tap to pay anyone. We are all becoming terminals. And last, our phone is becoming our wallet. Nearly everything we had in our wallet is now on our phone. Our payments apps, of course, our passports, our loyalty cards, our health apps, our driver's license. The only thing missing right now is cash, and that's about to change too with the emergence of digital currencies. And thinking of digital currencies, if you think one can't exist outside of Looney, I still remember the day when you could use Sandy McTires to buy a beer in a bar. Maybe it was the original crypto. Truly, nothing is really new out there. So let's talk about how tech is changing, though, the experience. First, we should all understand crystal clear the next gold rush is for experience. And Apple, Google, PayPal, Alipay, WePay are all looking to do one thing. They want to own the payment experience so they can influence purchase behavior. If you own search, you own digital advertising. If you own the wallet, you own commerce. And if you own commerce, you can influence $35 trillion of global spend. And banking and payments are quietly converging. Just imagine if every time you pulled out your debit card, your balance was printed right on the front. And when you tapped and paid with it, it was instantly updated. Would you ever let that go? The answer is no. Why? Because it puts us in control. There's a reason why 90% plus of bank app usage is simply checking your balance. We want to know where we stand. It's that simple. Said differently, though, from a technology perspective, banks are one API away from shifting 90% of mobile banking app usage to the wallet. Think about that. One API could wipe out 90% of reported mobile banking app usage. That's the power and the risk of technology. It's a cold war for experiences out there. And the ultimate goal is the super app, the one app where you can shop, pay, save, and more importantly, bank. Everyone is after it. Take a look at what Google Plex did in their next generation wallet. Payments, banking, offers, loyalty. We are getting there, and we're getting there a lot faster than we realize. So what's a bank, or more importantly, what's the banking industry to do about this? Well, first, we all need to think beyond the payment. How can we bring offers into the payment process? Why shouldn't every card offer promotional financing? Why shouldn't billing information move with payments, not around payments? The ad market is worth billions, yet banking experiences are functionally correct and emotionally devoid. They do little to help me beyond the basics. We have to think how we bring payments to life, and we have to think beyond the payment. We have to innovate, and I believe it's easier than we think. Apple wasn't the first to create the smartphone, but they did it right. They copied, improved, and repeated the formula. Why can't banks offer to provide our paychecks a few days earlier? Why can't banks integrate simple money transfer experiences into their app? Why can't I add crypto to my savings account? Why can't I see offers in my banking app? The best defense to this coming battle for experiences is going to be a great offense. And we all have to understand the battleground is shifting, and it's shifting fast. Focus on the mobile wallet. Here's a simple question for everyone listening today. If you are a banker, why can't I tap and pay with your mobile banking app? It's clear that with just a handful of APIs, Google and Apple can absorb nearly all mobile banking app usage into their wallets. Just look at the Apple Card and look at Google Plex. They're coming. So why can't I tap and pay with your mobile banking app? And think about how to bring your card to life. Why not print the balance on the front of the card? Show you're open to buy, your rewards balance. Bring experiences to your customers, not customers to someone else's experience. And again, ask and answer the question, why can't I tap and pay with my mobile banking app? 60 years ago, pioneers in the banking industry got together and they changed the history of payments forever. They realized there was power in numbers and standards. Today is no different. We must collaborate to win. First and foremost, realize other banks are not the competition. The competition is for experiences. Create the standards for services beyond the payments, the delivery of offers, billing, loyalty. Make them open and available to everyone. Demand a level playing field for payments. Force an answer to the question, why can't I tap and pay with my mobile banking app? Own the experience, set the standards, compete on the product. If we write the ending we want, we will change the future of this industry together. If we don't, the ending will be written for us by others. But in the end, I'm confident that together we can and we will again write the next story of payments. Thank you. And I hope to see everyone again in person in 2022. Thank you very much.